Good afternoon, esteemed traders and investors. Today is Tuesday, November 18th. I present to your attention another market review for Forex. As always, I'm glad to be here with you today. So, today is Tuesday. There are no important news events on the calendar. Major news will only start coming in from tomorrow, including the FOMC. Let's take a look at what can be traded on the charts. So let's start the analysis, dear friends. So what do we have? Gold. Gold is falling for us. Let me remind you that last trading week produced a pretty decent pin bar, from which a short initiative is now developing to strengthen the US dollar. The first bounce already happened yesterday from the long break that took place at the beginning of last week, a strong bullish bar, a pullback, and again a corrective move. I think it's quite possible that we could generate another similar impulse from which you could sell further. That's the kind of setup we're looking at. So if you're a die-hard seller, which is entirely possible, you can play with this kind of structure: impulse, pullback, and a third wave. In my opinion, that's a perfectly feasible scenario. Below, on the rise, no one was stopped out here, so it's a good target for selling. Of course, the pullback might not happen, and the price could just fall into this zone, which would also be a valid area to look for buys, because even if you take this correction, literally about 12,000 points, that's not a small amount, my friends. Looking for real trading advantages? Forex offers the lowest spreads and commissions. For major currency pairs, our conditions are more favorable, spreads are lower, and the commission is only $5 instead of $7. That's real savings for every trader. And now let's get back to our market overview. The EU-RUSD pair looked rather bleak yesterday. The movement was interestingly short-oriented. And by the way, for those who trade Vanga, who trade by words, pay attention to this word, let's count. If there were buys here with a stop of about 100, the market is already giving friends 120, that's 1-to-1. So what can we expect next from this sometimes unpredictable instrument? After forming a pin bar right in this area, the instrument is currently correcting its movement. As I mentioned earlier, in my opinion, the setup that we see here isn't particularly interesting or appealing to trade, but the area up above is interesting, the one that still remains and hasn't been taken out yet. It would certainly be interesting to hunt for that area, but it's not entirely clear what to rely on right now. Our short structure from yesterday is breaking down. Note the downward trend line and the impulse we've seen so far, which is on the 15-minute chart, but it's there nonetheless. If it holds here, you could very cautiously play a three-wave move according to this scenario. However, the impulse is Asian, not European, so this might be a false story in terms of stop hunting. For now, there's nothing particularly interesting here, except that the lower area is also clearly defined by the lows, and it might get taken out as well. So, for now, I'm skeptical about this instrument. There are targets both below and above, but I don't see any key breaks to rely on yet. I also want to remind you that every Forex client automatically receives loss insurance. For every $1 of compensation, only $4 of your friend's investments are required. Just submit a request, and your losses will be recovered. Let's continue with the review. The euro-dollar pair also generated a long impulse today and has been ranging for several days now, almost into the second week. The fours clearly indicate this movement. Remember the massive drop from mid-October to early November, then a long impulse, and now we're in this wild flat range. In terms of break analysis, there were some good opportunities last week. Testing the long break, impulses, pullbacks, everything is holding. The lows aren't being broken, and neither are the highs. So we have this kind of triangle that's squeezing the instrument. Perhaps this is happening ahead of the non-farm payrolls, which according to the calendar are not on Friday, but on Thursday this time. It's gathering liquidity in order to naturally dump it all later. But as for yesterday, we had a bearish break. Let me point it out. It's right here, just below the zone where the pound is currently sitting. So it's an American bearish break. We haven't seen one in a while, but if we don't count this upper one, we'll take it. If we don't count it, we'll take it. So there's a long position support below, which has been tested many times, two bearish levels above that have been tested twice, and new bearish levels right under which we are standing right now. It's logical to assume that the instrument could drop from here and break out of this triangle to the downside with risks from the current level of about, say, 300 points. The first target is even just to update this initiative bar, 500, 600, and almost 800 points. Let's see how this scenario plays out. With InstaForex, you can triple your profit. For every $4 of your friend's investments, you automatically get an extra $1 added to your profit, with no extra conditions. The Australian dollar has moved exactly where it was sent, to go after the liquidity that's concentrated along this sluggishly sloping trend line. There's no clear quote or fixation of short positions here, but I think I'm showing the H4 time frame here. This is the weekly low. Everything below these wicks, and especially if we average out, say, the breakout quote at 0.64141, I believe all of that should be taken out, no question. This could happen precisely due to the strengthening of the US dollar, which might occur on the news that will finally start coming out this week after the shutdowns in the US. The US dollar to Canadian dollar pair is also following a long scenario. I showed it yesterday. There are two major breaks, one below and one above, and inside here, a small long break appeared yesterday. And at the end of the week as well, yesterday, this small long break was tested. And as I see it, the 1-to-1 ratio, 280 to 415, is already being achieved. Of course, it could still reach the short break zone. It's a good setup on the H4 time frame, quite solid. It's viable. We also have a great offer. Fund your account and get a 30% tradable bonus. Trade with additional capital and expand your opportunities with InstaForex. Now, regarding the dollar-yen pair, it's actually quite an interesting story. At the end of last week, the dollar-yen was still giving some long signals, but this week you could say it's been completely engulfing. Why am I paying such close attention to the dollar-yen, you might ask? I'll tell you, on the weekly scale. And right now, you see the instrument's quotes from 2019, back when many of you didn't even know what modern trading was. The thing is, if I remember correctly, the dollar-yen instrument, together with the 6G futures, which is its inverse, left the ancient Japanese platform at the level of 139.372. If you believe in the strengthening of the US dollar, then you can ignore everything I'm about to show, but if you believe in its weakening or in the strengthening of the yen, which in principle could happen after the same wave of devaluation that's happening now, then this mess should be covered sooner or later. That is, let's say you want to hedge your positions. If, for example, you want to bet on the strengthening of the US dollar using certain instruments, then for betting on its weakening, it's better to use this instrument. Now, I'll draw a very rough picture, something like this, under this platform, but I'll immediately erase it so you don't rush to sell sharply because you need some solid reasons to sell. Well, for example, the obvious question is where to place your stop. Naturally, it makes sense to put it above the year's high. With stops of about 4,000 points, you can expect a profit of 15,000, which is roughly 3-to-1. But I know very few traders who can set a stop of 4,000 points, so you can carefully look for some short setups that might form here. But for now, they're not happening, but you should keep an eye out. That's all for now. Trade with InstaForex, subscribe to the channel, and stay tuned for new market reviews.